This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Roger McEowen, K-State and Washburn law professor, begins today's show discussing digital contracts, spousal lifetime access trusts, a Water of the United States case, and an IRS code for extended livestock replacement. Today's show continues with Brian Briggeman, director of the Arthur Capper Cooperative Center at K-State, as he provides an update on cooperatives in Kansas as October is National Cooperative Month. The Beef Cattle Institute's Brad White, Bob Larson, and Phillip Lancaster wrap up the show answering a listener question on supplementing cattle while the producer has a busy schedule. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Wednesday show discussing agricultural law and taxation items that people should be keeping in mind with K-State and Washburn law professor Roger McEowen. Roger, thanks for joining us today.
Thank you for having me, Shelby.
Roger, talking through a few different topics today, but first discussing digital contracts. And before we talk about the digital aspect, what are components that make a contract a contract?
Well, every contract, Shelby, has some basic core elements to it. We have to have an offer, and that offer has to be accepted, and then there has to be consideration or something of value that is exchanged between the parties. And in general, there has to be a meeting of the minds as to the essence of the contract. In other words, if you and I are negotiating over something, what you're offering, I must accept that. We can't have a misunderstanding as to what you're offering. And we get into these issues with oral conversations. You say one thing, I'm thinking another. And we didn't really have a meeting of the minds as to what the core essence of that contract was. So we've got to have all of those elements to have a basic contract that would be enforceable under law.
As we're talking about contracts, remembering also that if there are changes, both parties need to agree on those.
Yeah, that's true. We used to have, years ago, before we got what's known as the Uniform Commercial Code, we used to have what's known as the Battle of the Forms. And so you would make an offer to me, I would modify it, send that back to you, you would change that, go back to me, and so we would battle over the structure of the form, the language in the form, back and forth and back and forth. So that acceptance has to mirror the offer. And so any change means no deal until the original person that offered what it was for sale accepted the new term. So that's a kind of another core element that's out there and that's basic to all contracts.
We've mentioned contracts many times with you, Roger, and wanting to remember that the digital contracts are just as binding as the paper ones.
Yeah, that's true. You have to make sure you know what you're signing, whether it's paper or digital, and you have to be, I think, particularly careful with a digital contract. If you're going to click to accept the contract's terms, make sure you know what you're accepting. I think we've all been there with respect to buying something online, and we hit click to accept, and then we realize, well, wait a minute, I just bought 2 of those, or I only wanted 1, or no, I got the wrong shipping address, those types of things. So before you click to accept, make sure that everything is in line with the way you want it, because that acceptance, you might be able to go back and fix it. But, boy, that really casts it in stone when you click to accept on a digital contract.
And another thing that producers might want to be thinking about when it comes to estate planning, a spousal lifetime access trust, and what is that?
Well, that's a good question. It's also known as a SLAT, an S-L-A-T, Spousal Lifetime Access Trust. And this is a technique that I think is probably pretty valuable to some people right now that might have an estate tax problem if the estate tax exemption drops, which it will if Congress does nothing, starting in 2026. And what it is an irrevocable trust that is designed to provide income to a beneficiary spouse while removing the trust assets from the grantor spouse's taxable estate. Now, it is irrevocable, so you can't modify it or revoke it without great effort. You can't basically revoke this or modify it after you create it, and the assets cannot be returned to the donor spouse. And so what you do is you set up a trustee, and the trustee has to ensure that the trust assets are going to be used according to the trust terms and that the beneficiary spouse will get the income from the trust for life. And then when that spouse dies, the remaining assets in that trust pass to the designated beneficiaries that are listed in the trust, free of estate tax. Now, I think that could work well. This whole technique would work well while the exemption is high, which would allow you to shelter a lot of asset value into that trust and offset it by that high level of the exclusion amount right now. That value would also, as I indicated, be kept out of the beneficiary spouse's estate because they just have the income from the property for life. And so if you've got assets that are going to appreciate in value, then the tax benefits can even be greater in terms of getting the maximum benefit out of reducing taxes. Now, the downside on this technique is that the ultimate beneficiary, say your children, won't get a step-up in basis at the time the second spouse, the beneficiary spouse, dies, because that's just life estate property. So their basis is going to tie to the value of the assets at the time they were transferred into the trust. So it could be a useful technique for people, but they do need to talk to their tax advisors and their estate planning advisors to make sure this is something that will actually work for them.
And within this blog article, another topic you covered involves, once again, the waters of the United States. And what can you tell us about this case?
Well, we've got a case out of Idaho that has taken the Sackett opinion from the Supreme Court in May of 2023 and applied what the Supreme Court said to this ranching operation in central Idaho. And what happened was that the EPA came in and claimed that the ranch had discharged pollutants into a navigable water of the United States, which was a river that went through the ranch, and associated wetlands that they said were adjacent to that river, without having a Clean Water Act discharge permit. And it was the EPA and the Corps of Engineers then that notified the ranch that they were going to start investigating potential violations of the Clean Water Act. And as it went on, the EPA ultimately sued the ranch, claiming they had made illegal discharge of pollutants by constructing multiple road crossings across the river and across the wetlands, which impeded the flow of the water and polluted the river, and that they were mining sand and gravel from the river, and that they had a center pivot irrigation system that disturbed the wetlands that they claimed were under their jurisdiction at the federal government's level. And so the EPA wanted an injunction that would shut the ranch down from further discharges and would require the ranch to restore the impacts that they had made on the river. And the ranch moved to dismiss the case, and the court granted the motion and dismissed it, saying, well, EPA, in your pleading, you didn't sufficiently specify that the wetlands at issue had a continuous surface connection with the river to be considered indistinguishable from the river, which was the test that came out of the Supreme Court Sackett opinion in 2023. The court said it's not enough, government, for you just to assert that, well, you can clear up any confusion on that point during the discovery process. And the court said, no, you have to give specific allegations at the pleading stage, and they didn't do that. And since they failed to state a claim upon which the court could grant relief, they dismissed it. But they gave the EPA a chance to amend their complaint. They had to do that within 30 days of the court's order.
What could this mean for farmers and ranchers?
Well, I think it means that the Sackett test is going to be really beneficial to farmers and ranchers and rural landowners in general. And the government just can't come in and claim that your wet area, which might be adjacent to a navigable water course, such as a river, without specifying where the river ends and the wetland begins. In other words, there has to be a continuous surface connection between the two. And that is the test. And that's going to help a lot of people in Kansas, in particularly western Kansas, because there may not be a continuous surface flow of that water. There may not be a connection, a direct connection with the regulable water course, and so it's going to remove a lot of ditches that have just a non-permanent flow of water through them, intermittent flows, and kind of the Playa Lakes area around Great Bend.
On the opposite side of water, wanting to mention drought and an IRS code provision when it comes to extended livestock replacement.
Yeah, there's this rule in the code, Shelby, that says that if you have to sell more livestock than you normally do in a particular tax year because of weather-related conditions, and of course this is known as the drought sale rule, but it's all weather-related conditions. If I have to sell more than I normally would, I shouldn't have to pay tax on that additional amount because that might change my tax planning, obviously, and it might bump me up into a higher tax bracket. So what I can do is I can defer the gain on the excess number of livestock sold attributable to that excess until I replace those and then sell the replacement animals. So it's an involuntary conversion provision. So I take the excess that I sold, I replace them with like-kind livestock. When I sell the like-kind livestock down the road, that's when I would report the gain that I've deferred from my existing herd. Well, the replacement period used to be 2 years, then it got extended to 4 years, and then IRS said that if drought continues, you get to add another year. If you haven't had a drought-free year in your county, you get to add another year to your replacement period. So that 4 goes into 5 could turn into 6, so forth and so on. And every year by the end of September, the IRS publishes a list of the so-called drought counties, and the vast majority of Kansas counties do qualify for that additional 1-year extension.
Roger, what counties in Kansas aren't qualifying for that this year?
Well, it's kind of interesting because normally the counties that don't qualify are in northeast Kansas, and indeed there are 2 or 3 of those. We got Brown and Doniphan and Nemaha counties that didn't get the 1-year extension, so the 4-year replacement period still applies. But then we have Cherokee in the southeast, and then we have Cheyenne, Logan, Wallace, and Wichita, which, interestingly enough, were not drought counties from the beginning of October last year to the end of September this year. So they do not get the additional 1-year extension for excess livestock sales on account of weather-related conditions in those counties.
Are all livestock included in this code?
Well, no. They have to be held for draft dairy or breeding purposes, and poultry do not count also.
Roger, I appreciate you taking the time to join us today.
Thank you very much, Shelby.
That was K-State and Washburn law professor Roger McEowen. I will link his blog articles where he talked about these topics in today's show notes on agtoday.net. We're cutting to a short break now, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we continue our show talking about cooperatives as October is National Cooperative Month. So, and to talk about them, we're joined by Director of the Arthur Capper Cooperative Center at K-State, Brian Briggeman. Brian, thanks for joining us today.
Thanks, Shelby. Great to be here.
Brian, as we're talking about cooperatives, and before we give an update on how they're doing, when you think of a cooperative, what do you think of?
Well, a cooperative is a way for folks to come together in an organization in order to meet some need or something that helps them, whether it's in their everyday life or from a business standpoint, accomplish it. So really cooperatives, it's the personification of people coming together to do more, right? To find a way in order to meet goals and objectives. So, at least just thinking about the co-op model, which is really important for this month of October, because October is National Cooperative Month. It's important to think about what makes co-op successful is people working together.
As we're thinking about it, just reminding cooperatives, not only agriculture.
Correct. So if you think about rural America, right, many of your listeners live in rural America. Co-ops are certainly recognized from an agricultural standpoint, right? Within the ag industry, many of our towns across Kansas have a skyline because of a co-op, right? Because of the grain elevators that are there. But as you said, it's more than just agriculture. You think about rural electric co-ops provide power across the state of Kansas. Not only, even in more metropolitan suburb areas, have electricity because of a rural electric co-op, and then certainly, across the state. So, and we have telephone cooperatives, other utilities, grocery cooperatives as well. So, you go to Kiowa, Kansas, there is a grocery co-op there, as well as some other cooperative businesses that work on a cooperative basis, to where they're owned by, their members, and they provide benefits back to them, whether through competitive prices or even possibly returning patronage dividends to them. So cooperatives, there's, far-reaching. There's many other industries that I didn't even bring up here, but those are some of the ones that you would see in our rural towns across Kansas.
Really important to community, really important to agriculture. How are cooperatives doing, Brian?
Well, from a financial standpoint, when we look at, the 2023 crop year, so looking at last year, certainly was difficult for farmers, right, in the state of Kansas. There were some pockets where things did pretty well. And I always, when I teach in my co-ops class, I really try to emphasize to students that farmer cooperatives kind of go with their farmer owners, right? We tend to see that close tie because these cooperatives are owned by farmers. So it's not surprising when I look at the 2023 data for farmer co-ops in Kansas that it was a tough year on average from a profitability standpoint, looking at having to utilize additional amounts of debt in order to kind of get through this time. So, yeah, on average, certainly was a challenge, but there are, certain co-ops across the state that did have good years, and a lot of it just kind of ties back to that volume of production, and where they kind of operate. But on average, for farmer co-ops in Kansas in 2023, I would say it was a tough year.
So you're talking about last cropping year, so probably seeing a similar story for this year, at least so far?
We certainly could see that, but again, wheat, for example, across the state was a challenge, right? There's some areas that did all right, but by and large, the wheat harvest was a little light. But as we look at corn and soybeans, maybe those numbers will be a bit better. I know you talk a lot with Dan O'Brien. He would be far better suited to talk about, where we're at in terms of the crop, the fall harvest. But, by and large, it probably won't be a banner year like what we have seen in the past, but hopefully will be better than 2023.
Cooperatives, member-owned, farmer-owned. How can people maybe get involved with cooperatives?
So from a agricultural standpoint, to be involved with it, certainly need to be a bona fide agricultural producer to join. And I think many of your listeners are involved or members of a co-op across the state. But even it's beyond that. I think there are ways that whether it's employment, I know there are farmer co-op, and I talk to CEOs and general managers, there's always looking for, so jobs are posted, looking for that next round of talent to come in and work at a co-op. There's some great job opportunities at farmer cooperatives with competitive pay, but also, too, even beyond that, to think about the co-op retirement program. Some of those benefits, largely, if you work within a co-op, you're into that retirement program. And when you retire, think of it like a pension. I mean, it is a nice, stable retirement salary that many retirees that I've talked to that benefit from that co-op retirement program. It really is a great benefit. So I think those are some things that, if looking for jobs, consider working at the co-op can provide great value, not only to you, but also to the communities that they work with.
And as we're talking about cooperatives, Brian, you're doing a little bit of research around it and taxes and how the financials work for farmers. Right.
So I think with this, challenging year that farmer cooperatives on average coming off of, and then, looking into some questions and uncertainty about this year, one of the things that farmer cooperatives have available to them is a tax benefit that they can utilize themselves and also to the benefit of their farmer owners. And what that is Section 199A. I won't get into all the details of that. We'll maybe do that later in a follow-up discussion. But just know that this is a tax deduction that was tied to the 2017 Tax Cuts and Jobs Act. It was codified into law. And it is a benefit to co-ops where they can utilize this tax deduction, but also can pass some of it through to their farmer owners as well. And some of this early research that we're working on, we can show, or at least see, that this 199A deduction has helped provide farmer cooperatives a way to retire equities, right? So even though it was a challenging year, having that deduction allows them to still be able to pay back that retained patronage, that allocated equity back to their farmer owners, and also too with cash patronage rates. And the other way that we're seeing within the data that I have is looking at investments in capital expenditures. So things like speed and space, elevators, maybe different warehouses, just different things that they can put an investment within the co-op in that rural area to the benefit of farmers. And then finally, the way, and I can't really show it as well in my data, but I certainly have plenty of anecdotal evidence from other co-ops. Cooperatives will use as much of that deduction as they can, and then they'll pass some of it on to that they may be not able to use. So it helps farmers as a way to lower their taxable income. So the Section 199A, the reason why we're starting to look at it is it does provide benefit to co-ops and to farmers, and it's also set to expire in 2025. So this is certainly going to be it is discussed. I know many in the cooperative leaders across the U.S. are going to their representatives in D.C., talking about the benefit of it, the value of this deduction, and the need for it to remain, because it does benefit farmers in rural America.
Brian, as you're the director of the Arthur Capper Cooperative Center, wanting to remind people what that provides to farmers and people across Kansas.
So the Arthur Capper Cooperative Center was established in 1984. So this is our 40th anniversary of the Capper Center, and we're a public-private partnership between Kansas State and the Kansas Cooperative Council. So the 80s were a turbulent time, right, to put together the center, and the co-op leaders in the state of Kansas said we need to have a center of excellence that can help us think through research issues, to help make cooperatives more successful in the future and to navigate some uncertainties, and to support education programs that can help farmer directors as well as co-op employees, with decisions that they're facing. So since that time, that's what the Capper Center's mission and purpose has been. And, it's, for me, it's working closely with the Kansas Cooperative Council. So I teach in a lot of their education programs. So to work with them, I work closely with a number of co-ops across the state, whether that's going into the boardroom, leading a discussion around some strategic issue, or even just having phone conversations and talking through some different challenges that co-ops might have. So for me, and then putting on, different programs, the Leadership Symposium for Cooperatives is a timely, topical program that we put on every August here at K-State. So really, it's just being that resource that's available. So if any of your listeners, out there, if they have questions about cooperatives or maybe are facing a challenge, please reach out to me. You can find me on K-State's website, and then on our website for the Capper Center, which is www.accc.ksu.edu.
Brian, I appreciate you taking the time to join us today and share with us some more information about cooperatives.
Thanks, Shelby.
That was Director of the Arthur Capper Cooperative Center at K-State, Brian Briggeman. I will link the resources that he mentioned in today's show notes on agtoday.net. We're cutting to a short break now, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we conclude our Wednesday show with part of the Beef Cattle Institute's Cattle Chat podcast with Brad White, Bob Larson, and Phillip Lancaster as they answer a listener question.
This is a producer that has cattle in multiple locations, also has a farming operation, so they're currently busy harvesting, and the cattle are at a location that's far enough away that about once a week is all they can get to make a trip to check the cattle for the next 6 weeks while they're doing harvest. The problem is they would like to supplement those cattle with some protein because they're on dormant forage where the protein is very low. So is it worthwhile to supplement them once a week when the recommendation they received is supplement them every other day?
And a little bit of background. This was a question from a producer that he asked it very well and he also kind of set me up in that he said he had already talked to a couple of nutritionists and a couple of people from another university. So I asked him how many different answers he had gotten so far, and it was several. Because, he's got cows on 3 different locations, and they're quite a bit of distance between the 3 locations. And he's busy with farming. And he knows that in about 6 weeks or so, he's going to take the cows from all 3 locations and put them on corn stalks. And at that time, he'll be able to supplement, 3 times a week, however often he needs to. But right now, for the next 6 weeks, although he admits he's got plenty of forage, but the forage quality, the protein levels, is pretty low. So one of the great things about a ruminant or cattle is that they can recycle protein or nitrogen in that they don't have to have, in order to keep the rumen microbes, the rumen bacteria healthy, they don't need protein every day, because every other day it'll recycle around to keep the protein levels up. And he knew all of that. His real question was, well, how seldom can I get by with it? Is once a week enough? And he was feeding about 4 pounds of distiller's grains once a week to cows on a poor quality native grass pasture. And his question was really, is that helping me get through the next 6 weeks? So I kind of turned to Philip.
Well, so there's some research that has looked at supplementing every day, 3 times a week, or just once a week, comparing those all in the same study. And there's a little bit of drop-off for once a week in the improvement in forage digestibility that you get with protein supplementation. But it's still better than no supplementation. And so I would say that once a week for 6 weeks is probably going to be fine. His cows might lose some body condition score compared to if he was able to go supplement them 3 times a week, but they're going to lose less body condition than if he stopped supplementing them altogether. So I would say that he should continue to do it once a week if he can. He needs to supplement an additional amount. He doesn't want to supplement just 1 day's worth of supplement once a week. He needs to supplement multiple days worth of supplement at one time, which can have some issues of its own if we're not careful. But just from a protein perspective, you got to give the animal the excess protein that they can recycle.
So you'd like to see him go up to like 8 pounds once a week or something?
Yeah, he
like
was doing. You said he was doing like 4 pounds.
That's my understanding.
Yeah, maybe go up to 8 pounds. I think he would probably be okay from that perspective as far as rumen health and things like that. That would extend that rumen nitrogen recycling for several days, and probably wouldn't even notice any loss in condition.
As I talked to this guy, one of the things that he said was the local veterinarian actually, I think, gave him pretty good advice, and that was to really monitor the fecal pat as an indication of is he supplying enough protein. In that if he's not, what you'll see is not good digestion. So a tall fecal pat, more dry. You want it to be kind of a more normal fecal pat that if it dried out, you could use it as a Frisbee, those types of things. And so you could monitor that, which would be a quicker response than monitoring body condition, because it may take a while for body condition to drop. And if you're getting those tall, dry feces, then probably need to increase the protein, either the amount or the frequency, maybe go every 5 days or something like that. So he's got some options, and it is a relatively short time frame, 6 weeks. And so it's not like we're talking about the plan from now till grass comes on in the spring. It's for the next few weeks.
Once again, that was the Beef Cattle Institute's Bob Larson, Brad White, and Phillip Lancaster. You can listen to their full podcast episode on ksu.bci.org. That's all we have for you today on Agriculture Today, but we'll be back with more for you on Thursday.